Good afternoon. It's 12:53 Pacific Standard Time and New York time, almost 4 p.m. and markets are going to close. And I have the S&P 500 up here on a daily chart. And basically, this green line here is a 200-day simple moving average. And every time that we've had the first pass with the reversal, this is that volatility. But be advised that these lows are much different. Anyway, what we have here before us is that this 200-day simple moving average has given the S&P so far that wall of support. Yesterday we had a big rally up, and then today we have this big rally down. And I'm just going to blow this up because the S&P has a daily sell signal, and all of these key daily simple moving averages, whether it be the 20, whether it be the 100, whether it be the 50 and the 40-day, I will try to see if you can actually get a good view of these moving averages right here. 100-day is up here. You have a 50-day crossing over another one. You have the 10-day declining. This is a major problem. I want you to see how that 10-day is going down. It's not going up. The 50-day, which is extremely important, has actually been falling in value within this actual volatility hike that people have been doing, and therefore something's going to break. And the S&P did not have enough new money to get it through those prices up here. And then we rallied from here to there, and then we rallied back down, reversal for the bear, and then a big pop yesterday, and once again, it's giving it all back up. One of the other things that we're going to do is we're going to pull up a monthly chart. This is on the S&P 500. This is a monthly chart for calendar 2015, all the way up to what day? 8/11 of 2015. Now, what we have here is we've got a rising 10-month moving average, and that this low is higher so far. We're only 11 days into this month. The key focuses are, why couldn't this S&P break up through these resistance channels? They were met with sellers. I don't care what anyone. There was a buy program way back over here on the S&P, but ever since we made that uh, wall of resistance here, there was not enough money to push it through. And not only that, as we see it right now, um, that's the top end of the sell programs that people have been doing in the S&P. And the S&P, once again, is going to go down for the next 4 to 6 weeks. And somewhere in that time frame, we will be making a bottom in that S&P. But right now, that volatility is in the bear and the bull have been fighting it out, and the bear is winning when they have monthly sell wicks on top of here. Okay, here I'll just give you an example of what we're looking at when I say that. We're going to just blow this up right here. These are the highs. That was a high. It was lower than the previous high. This high came straight up, but this was 2130, and it went down. And this one here was probably right around 2129. And then, of course, this was the major peak back over here when I go to the trend tool just to illustrate that. That was at 2134. Okay, this high here was 2129. They came back again over here, and that was 2132 reversal. And let's get over here to this little guy. This reversal here was 2104. I talked about that the S&P had to close above 21 1.03 and consolidate that price area in order to get this bull on the run. But we've been calling for a good size reversal. And one of the things that I just want to share with everybody is that so far, this monthly movement is 44.75 on the S&P, but we're only 10 days into it. But we can read into the most important thing is that on 7/1 of 2067, 2132 was the high, and we talked about that in plenty of analysis that 2044 was that low, and they gapped it up that going into the close there. So this is what it looks like. There's going to be more volatility. There's going to be some more fear that's going to come into the markets. And seasonally, it's in the dog days of what? August. Let us not forget that.